Hello and welcome to this Stratagema Business Education Series video on Key Performance Indicators or KPIs for tracking sales and gross profits based on only two inputs, sales and cost of goods sold. This video is intended for small business owners looking for a way to quickly track performance and sales over time with basic data that should be easily obtainable from even the most simple accounting or record-keeping systems. Here's some data for a fictitious retailer. The data is based on a real business. However, sales and cost of goods sold figures have been scaled by some random amount to preserve any underlying trends. The data is provided for a 20-month period from January of 2021, when the business first opened, through to its most current month of operation, August 31st, 2022. In our example, net sales is calculated by deducting any sales discounts, allowances, and returns from gross sales. Gross profit dollars is calculated as net sales minus cost of goods sold. Gross profit percentage is calculated as gross profit dollars divided by net sales dollars. So let's start with a graph of net sales and cost of goods sold for the entire 20-month period. Here we can see that the net sales varies considerably from month to month and ranges between approximately $30,000 to $61,000. We can observe the low points being in the months of January, February, and March, and the high points around October, November, and December. This suggests our business is likely subject to cyclical variations, which is what you'd expect to see for a retailer. The 3 months leading up to Christmas are busier than the 3 months after. We can also see that cost of goods sold follows the variation. Cost of goods sold, however, doesn't tell us a lot. What we really want to look at is the gross profit percentage. Here we see the gross profit margin, or GP percentage, that ranges between 46 and 72%. That might seem like a wide range, however, this particular business carries a product mix with both high and low margins, which haven't been separated out from the aggregate data. Over the 20-month period, the average is just under 60%. This dotted trend line here is pretty handy and shows us that despite the highs and lows, the gross margin percentage is fairly stable and really isn't affected by the large swings in net sales we saw. Now let's look specifically at net sales growth. With our original data and chart showing all 20 months, we see that there's a jump in July and August, and that's because the business opened a second retail location in July of 2022. So all periods to the left of the red line are based on one location, and all periods after that are based on two locations. Ideally, you would want to separate the data for each location to evaluate each one independently as well as an aggregate. If we present the data by year and month, we can overlay 2022 against 2021 to observe any potential trends. Here we see that despite some variation between 2022 and 2021, there appears to be some seasonality involved here, and tracking more data over time will help identify that. Another useful KPI is the percentage change in sales from the previous year. So in January, for example, we see that 22 net sales were 2.3% higher than 2021. March and April were particularly robust, coming in at 25% and 27% over last year respectively. But then May and June dropped, with June being lower than 2021. After that, however, looking at the percentage sales change becomes a bit muddy because July and August includes a second location. However, what's interesting here is that even with a second location, August net sales, for example, are only 29% over 2021 net sales, which included only one location. This suggests that the first location might be in decline. Why might that be? Well, it could be because of possible organic decline or some other external market or economic factor. There could also be some potential cannibalization effect by the second location, which might be drawing customers away from the first location. Without more data, it's difficult to tell. So in summary then, as you saw, there are really only three key performance indicators or KPIs that you need to meaningfully evaluate your sales and gross profit performance. They include net sales dollars, gross profit percentage, and the percentage change in sales over the same period for last year. And all you need to calculate them are sales and cost of goods sold. I hope you found this video useful. If you have any comments or questions, or if there are any other videos you'd like to see on managing and evaluating small business performance, please provide them in the comment section below. Also, please consider subscribing so you don't miss out on any new videos to be released in the Stratagema Business Education series. Thanks for watching.